You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again, listeners. It is Education Wednesday. It is time once again for Options Bootcamp, the premier options educational program out there. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever scintillating, at least we tend to think so, Options Insider Radio Network. So first off, I know a lot of you like to mainline Options Bootcamp. We see more of you joining and discovering the show all the time. I got a feeling, given the events of this week, we'll probably see a few more people discovering the show this week. So first off, welcome. We love you all out there. Of course, there are many ways for you guys to enjoy this content. You get this on demand on every platform under the sun. Of course, if you haven't yet gone and upgraded and subscribed to our full network, listeners, you really should. You're missing out on a ton, a literal ton. It would crush you if we could weigh it. That's how much options content we are putting out there. We got Option Block twice a week. We've got Options Bootcamp, of course, on Wednesday. Options Playbook Radio, another show. If you're not listening to that show as a companion piece to this show, you are missing out. That's also every Education Wednesday. This week in futures options. You want to know what the hell's going on in commodity volatility, energy going through the roof, volatility, everything else, metals, you name it, equity indices. This week in futures options every Thursday. The Option Block twice a week, Monday and Thursday, for those of you who are more active in the trading sphere. You like a little bit of vol talk? I got a feeling everybody does this week. Volatility Views coming at you every Friday, noon Central. And of course, we go above and beyond. We have the Advisors option out there once a month. That's a very cool take at look, I should say, at the asset management space, how they utilize or perhaps should utilize options. And of course, for those of you who want to go above and beyond that, get live throughout the week, this show, every other show that we do, as well as, of course, get the exclusive shows, pro Q&A session. We just had Dr. Vix, the once future and present Dr. Vix. Is there ever a better week to have him on than this week? When we had him on yesterday, I had a lot of great questions coming in for him. Of course, Options Oddities every Friday as well. Where do you go to get access to that smorgasbord of riches? Theoptionsinsider.com/secret club is the place to go to kick the tires and light the fire. So looking forward to seeing all of you in there. And again, however you listen live after the fact, if you like what you hear, keep rating and reviewing. It does help, especially these days. So many new people are discovering the world of options and volatility. They need a bit of a guiding hand. So be that guiding hand, be that guiding light, if you will, and point them in this direction. If you like what you hear, if you don't, blame Dan and send Dan your hate mail. Speaking of the aforementioned black-hatted one, I am joined once again by the darkest of hearts, the blackest of hats, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call MTM. Mr. Dan, welcome back to the program on, shall we say, a tumultuous week, sir.
Hey, Mark. It's super darn good to be back.
Mr. Dan, I want to get into all the questions we have hitting us up and everything else in the mail call in a second, but we have to dive into it first here at the top of the show. This is, I said tumultuous. You could pick your adjective, and it pretty much applies to this week, unless you said tranquil. or quiet or placid. Those do not apply. But you're talking tumultuous, not quite unprecedented. There are maybe a few days that have threatened this, but pretty darn close. I mean, we came into this week just rip-roaring. We went into the weekend very skittish. Markets were selling off pretty hard. There was a lot of worry about what's going on over there in Ukraine. Of course, the Fed coming up this week as well. Bit of a 1-2 punch had the market spooked. We had the news over the weekend that we were pulling out, not troops, but pulling out diplomatic families in the Ukraine. Always a precursor to something worse. That spooked everybody. We came in on Monday morning, Dan, off over 4 freaking percent in the NASDAQ and around 2+% or so in most of the other major indices. Vol through the roof, VIX at about a 35. So, Mr. Dan, I know a lot of our listeners want to know, walk us through the day and the week from the Dan Passarelli perspective. You come in, you have your delicious, tasty beverage of choice, whatever it is in the morning. You fire up your machine over there in MTM Global HQ, and you see NASDAQ down 4.25%, VIX at about a 37, 38. What's going through your mind? What are your first steps in that kind of scenario, sir? What are you doing?
Well, after my first Bloody Mary, when
I didn't want to say that out loud for the folks. I let them infer that on their own.
Yeah, man, I'll tell you, looked at it and was like, wow, this is the opportunity I was waiting for, is basically what I was thinking. Because I love volatility, and I am thinking, damn, I had on my calendar to sell some Amazon and I didn't do that, but that's okay. Can't play them all perfectly, for sure. But that's literally what I was thinking. Like, hey man, volatility is opportunity. This is great. Like, I'm gonna sit here and wait and pick my spots and do some positioning. Now, it did have me thinking about how earnings trades were going to be affected, but so far so good. Earnings trades, our total earnings domination trades are playing out real nicely.
Now, you say you like vol. How would you typically play that? Are you coming in trading, let's say, SPY options, going the direct route? Are you more of perhaps, say, getting into a VIX downside to fade the pop, or maybe VIX upside to play the upside? You like maybe a ever-eroding product like a UVXY or a VXX? When you say vol is high and you want to start playing that, what is your preferred vehicle, sir?
I mean, in this case, I bought some VXX puts, longer-term puts, like the 56-day puts or whatever they were, and then sold some like 3 or 4 week call credit spread. So kind of played both sides, selling the call credit spread to finance the put, which does double down on your delta, but it is, sometimes that's a great way to play it, and sometimes it's a little dangerous, but I was good doing it that way.
Interesting. VXX. Everyone has their product of choice. They pick their poison. They want to fade vol, right? You're a VXX guy, not a UVXY guy, or maybe a VIX put guy?
I mean, it depends on the situation. I mean, in a situation like this where VXX really pops, because, I mean, look, like VXX has this natural bias to the downside. And so like you just have that extra thing helping you. So I liked buying the puts because it's got a bigger delta. I like doing a little bit longer term because it's got a little bit lower theta than shorter term. And I like having that long period of time for the natural drift to occur. And then financing it by selling the call credit spread that's at a higher theta. And because it popped up, the volatility of VXX, the volatility was pretty high. So I was able to, not just get a better price for the call credit spread, but more importantly to me, is I was able to sell farther out of the money for that call credit spread.
Yeah, people are always looking on ways to finance this. If you come in, just buy puts straight up in whatever, UVXY, VXX, you're paying a hefty premium. That's one of the more frequent questions we get on a show like Volatility Views. How do I pay for this stuff? So you get into the put spreads. A lot of people like flies, but the problem with flies, as we saw, they tend to whip around a little bit. And when that happens, you can blow through your strikes. But the nice far out of the money call credit spread is another way to do it. And this week, you certainly got some opportunities to sell some farther out of the money calls. Then, Dan, of course, we have this epic reversal on Monday morning where we end the day pretty much unched to up. Then we kind of see this pattern play out almost exactly the same the next day, off not quite as much. We're off around 2+% in the NASDAQ and S&P, and then see most of that erase. So what's going through your mind as we see these reversals playing out, sir?
Man, I'll tell you, I said at the beginning of the year that I think we're going to have, just a volatile, maybe even sideways. I said year. I mean, it's only January. That's kind of a big statement, So we'll see how that continues to play out. But I mean, I don't know. Like, honestly, I wasn't that terribly surprised because that's just what we've been seeing. I mean, we were in a period where interest rates were just so drastically underpriced that it was artificially keeping the stock market high. I mean, I think a lot of people would say that it's maybe been a little bit overpriced from a PE ratio standpoint. Although earnings, it's leading a little bit more the earnings growth that we've been seeing. I think, in my opinion, I'm not a total expert on that by any stretch of the imagination, but that's what I'm seeing. And so, now with interest rates rising, and I'm on Twitter, I'm seeing what Abigail Doolittle just posted. Fed says it will soon be appropriate to raise the funds rate. Fed says asset purchases to conclude in early March. Like, if interest rates are going to be going up, we're not going to have this case to artificially basically inflate the stock market, because if interest rates are zero, there's nowhere else to put your money except in stocks. So when interest rates become not zero, that becomes less the case. So I don't know. I'm not surprised. I think that we're in for a lot more of this for the rest of this quarter, for sure, if not the first half of the year.
I will say, to your credit, when we did that straddle poll, which we will play out from last week, you were very firmly on I think we're going to be doing more straddles this year. And if you had some straddles on this week, it probably worked out. Long straddles, I'm talking, obviously, listeners. All right, listeners, speaking of you folks, it is time to involve you in your show. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. Before we dive into that really quickly, we always ask you, hey, if you have a chance, if you like what you hear, listening on an on-demand platform, leave a nice review, preferably 5 stars, but we won't hold your feet to the fire. Most people, it seems like they like it. They're getting out the force. I think our average is like something like 4.8 or something crazy. So that's pretty nice. We thank all of you for doing that. This week's 5-star review comes in from, I believe this is Apple Podcasts. I don't know. There's so many platforms that it's up on. They're always grabbing different ones out there, but looks like Apple Podcasts. Comes from Sufi. I hope I'm pronouncing that right. Sufi says, excellent podcast. Extremely informative. Most options podcasts I've looked at don't even explain what a call or a put is. Wow, you're listening to the wrong one, Sufi. So this one was great for beginners like myself. Keep up the great work! ! Well, thank you, Sufi, and thank you to everyone out there who takes the time to listen and rate and review. Mr. Dan, what do you have to say for Sufi and everyone else who takes the time out there to leave us a nice 5 stars in their platform and podcast outlet of choice, sir?
Man, thank you so much. Like, I'll tell you what, I personally really appreciate that. I know Mark sure does too. And that's, I think I can speak for both of us. That's what keeps us going, man. Like, we do this because we love it. We do this because it's just a passion. And yeah. I mean, nobody writes us a check for this.
Yeah, we're not getting rich off this show. So it's just for the love, listeners out there. But yeah, you might say, hey, we've been doing this show for like almost a decade. Do we even need reviews anymore? And there is some sense to that. We have been doing it for a long time, but in other ways, they're more important now than ever because so many new people are discovering this show in particular. So and discovering the world of options, the world of vol. So those reviews, you could argue, are way more important now than they were, let's say, almost a decade ago when we were first starting this show. So if you like what you hear, we don't usually ask for them much, but hey, if you're interested, it does help the folks discover what's going on out there. Speaking of what's going on, we had a couple of fun questions of the week this week. We asked you back on Monday when VIX was almost at 38. And we said, hey, you think this has some more legs, this vol, or is this a short-term blip? Which level do you think we're going to hit first, 40 or 30? Or are we going to close somewhere in between on Friday? And we stopped it yesterday because we had our answer. But at the time we stopped it, it was about 38% for 40, 31% for 30. Actually, it was a tie for between 30 and closing between 30 and 40, both with, 31%. And obviously we know the answer. It hit 30. It's below that now at about 28 and change right now. So that's our answer for this week. We also have a fun one going on the crypto side. And again, if you like crypto, listeners, make sure you check out the full network because we have the crypto rundown. I forgot to mention that at the top of the show, another show that we do every week. And we asked you, hey, this sell-off in Bitcoin and crypto across the board, if you haven't been watching, listeners, have been getting beat up of late. Has this sell-off in Bitcoin, ETH, and other leading crypto assets, has it changed your outlook on the crypto market for 2022? And so far, resounding 52% of you saying no, about 17% saying yes, and 30% saying you don't trade crypto right now. And last week's one I just referred to with Dan, that we have results for that now. We asked last week, Dan, because Brian was talking about straddles on his show, OPR. We said, hey, long straddle is kind of popular and decently profitable last year in 2021. Is that going to continue to be the case, I should say, in 2022? Yes, no, or I prefer short straddles. Dan was firmly on the long straddle side, the yes side, and that won. 47.1% saying yes, 35.3% saying no, and 17.6% say you prefer to sell straddle. So, Mr. Dan, a feather in your cap. You were on the right side of this poll, and at least so far, for the beginning of the year, you're on the right side of history, sir.
Yeah, it wasn't just the right side of the poll. It was the right side of the market, man. Straddles were king this past week, right?
Yeah, good week to have some long gamma on, listeners, in your back pocket. Some long vol as well. All right, let's go out to this one. We get these kind of questions all the time. I just like this handle. This comes from the Rich Hippie. It just cracks me up and brings a smile to my face. The Rich Hippie says, hi, Mark. Well, hello, Rich Hippie. He says, have you removed the first episodes of the Options Bootcamp from Spotify and Apple? I was literally listening yesterday to an episode on spreads. I think it was number 13. And today, the earliest show I can find is episode 75. Was loving those episodes. Thanks. Well, you, Rich Hippie, and everyone else who sends us questions like this all the time. You know, it's available on just about every on-demand platform under the sun, including, as you mentioned, Spotify and, of course, Apple. We started on Apple way back in the day. Of course, Google Podcasts, you name it, Stitcher, TuneIn, a whole bunch of ones we never even heard of. They just go and they scrape the different directories and they pull our shows into their platform. So it's available pretty much everywhere. Of course, YouTube even. You can get on your smart speakers. It's available on all these. And sometimes these different outlets have issues for whatever reasons. First off, you did the right thing. Asked us what's going on. The answer to this is always no. We're never going to pull an episode of Options Bootcamp. So if you can't find it, chances are there's something wrong with the outlet you're looking at. It's all good now. Whatever glitch they had was sorted out. But if you want to find all the episodes of every show, I said this before, I will say it again. There are two destinations you need to keep in mind. It is our website, has all the shows, every archive, every episode you could ever want to hear. And if you want to get it on the mobile side, you don't want to stream it from our website and you're on the go maybe, grab our mobile app. It's available for all the leading Android, iOS, even Kindle Fire, for those of you who still rock the Kindle Fire. And you could listen to every episode of everything. You could build your own playlists, do whatever you want till your heart's content. Send us feedback directly from the app. So if you don't have both of those, or if you haven't been to our site, you don't have the app, you should check it out because it will save you from all these issues going forward. All right, here we go to Davis. Actually, we got two for. Maybe we'll combine them together. McGonagall, isn't that Harry Potter? We got McGonagall and Davis. Let's go to Davis first. Davis says, I don't get people buying puts right now with skew so high. You have to pay a 25% premium above the at-the-money vol in SPY right now. That's a huge amount of money. How do you make that pay off? And we have a related question from McGonagall. I just like that handle. Says, what does it mean when someone says they're a long skew? So a twofer, Dan, in the skew category. Maybe you do McGonagall first, so that's easier. What does that mean when you're long skew? And then the related question here from Davis, because he's right. People were paying exorbitant premiums coming into this week for their downside protection in all the indices, SPY, Russell, pick your poison. He wants to know, how do you make that pay off, sir? So a twofer for skew this week.
Yeah, so skew is simply like if you look at an option chain and you have implied volatility as one of the columns, which if you've been listening to the show, you better by now. But if you look, all the options in a particular expiration, they all have a somewhat different implied volatility. And so if you compare what the implied volatility is of like the out of the money call, like say the 25 delta calls versus the 25 delta put, you know, like that is skew. It's that relationship. And with a typical stock, you'll see that the puts have a higher implied volatility than the call. Now that's not universally true, but that's true with a lot of stocks. And so for Davis's question, The answer is you probably don't. People love, it's like crack, man. People love buying puts when they're dreadfully expensive and the market's down. They just love doing it. Like they can't freaking help themselves. And so, how are they going to make that money back? They're not. They're just going to give it to us. Right? Because when we do our analysis and see that the implied volatility is dramatically overpriced, that gives us an opportunity to sell overpriced insurance. And so, as they say, the more you learn, the more you earn. That's why people get their education here on Education Wednesday. Listen to shows like this, read books, take classes, because the more you learn, the more you earn. You don't want to be the guy or gal who's buying overpriced puts when the market's already down.
I like that. They're just going to give it to us, Dan. They're very nice. They're very charitable out there. Give us all your put monies out there. But you're right. We had this conversation on vol views multiple times as well. When these puts are that extremely overpriced, they almost can't really pay off. You need such an apocalyptic, aggressive downside move to get some of that premium back. In most other scenarios, if it's just a gentle drift down or even a staccato sharp, but kind of has periods of quiet in their sell-off period, then you just puts are going to crash in, and all that premium you paid over the at-the-money vol is just going to evaporate. So, yeah, it's a very difficult scenario. Who asked that? Davis. And so, yeah, the answer to Dan is right. Don't buy him. Don't buy him now. Let's go to this one from Sean. Sean, it's either Sean S or Sean's plural. Maybe there are multiple Sean's right. I'm going to go for Sean's. I like that. There are two Sean's writing to us. The two Sean's want to know, hello, OBC. Well, hello, Sean's plural. I'm enjoying the program. Thank you. I know it's not directly an options thing, but you've discussed crypto in the past. Products like BITO, of course, that's the ProShares BITO product, listeners, make it easier for people to trade the options. So I'm wondering where you think crypto belongs in the portfolio of modern options traders. Does it have a place as a diversified asset to hedge against equity risk? We crunched a lot of these numbers on our TWIFO program, This Week in Futures Options, looking at the actual cross-asset correlation of crypto to everything else out there during this past year, which was an insane year, obviously, and also since the start of the pandemic. These are areas these are timeframes really that are really important. I saw some data recently. Some ridiculous percentage of people, got their first crypto trade just in the past year. So we have seen just a lot of, like we have with options, a lot of influx there. But, the moral of the story right now is so many people trading equities and also trading crypto, and indeed big funds that are holding equities and also holding crypto. These correlations are growing exponentially. Back, 2010, 2013, the early days of Bitcoin, when it was this completely separate thing, and people who were owning it, they weren't even really trading it. They were just mining it and owning it. And it was a completely different class of people who were mostly trading it and owning it and mining it. And it wasn't at all correlated to S&P because it was just a different thing, a different beast. A different group of people were trading it and owning it and hodling it and mining it. These days, not so much. Your grandmother literally has probably heard of Bitcoin now. It's out there, and a lot of major funds have an allocation towards it. And so guess what happens when they sell off, they have to liquidate some assets. They're selling off their crypto as well, which is why we're seeing in these big days like this week, yet again. Look at this week, yet again. When it all hits the fan, correlation tends to go to 1. And that has been the case this week as well. Bitcoin sold off hard, and then it reversed, and it moved just like the equities. In fact, the numbers we crunched for last year, this past year, we saw pretty much about 25% positive correlation to the major indices. It was a little bit stronger, 26% for Bitcoin to the Russell 2000, 25% for the or actually 24% for the S&P 500. So right around 25%. And that's getting even stronger. We'll get to that in a second. Versus copper. Everyone talks about gold, but it was actually 25% correlation versus copper. Last year had actually no correlation to gold. It was negative 2%. So that was kind of interesting. Everyone talks about Bitcoin as a digital gold. And the weakest correlations that Bitcoin had were to the 30-year, a negative 8%, and 10-year, negative 6%. There weren't a lot of negative correlations last year to Bitcoin. We go back to the start of the pandemic, things change a little bit. Bitcoin versus NASDAQ and the Russell 2000, that correlation gets stronger. It's 33%, 31% versus the S&P 500. So then again, look at that. You have that in your portfolio. Everything starts selling off. Guess what Bitcoin's going to do now? Bitcoin versus silver was 26%. And only 18% correlation to gold since the start of the pandemic. And Bitcoin, if you're wondering, versus live cattle, 18% correlation as well. So the correlation since the start of the pandemic for Bitcoin to gold is exactly the same as Bitcoin to live cattle. And again, since the start of the pandemic, you can see the numbers. It was pretty much, even 2019, the correlation was pretty weak. And it's getting a lot stronger as things are popping off. Dan, I know you've been kind of hot again and cold again, on again, off again with crypto. What are your thoughts on Sean's question, where you think crypto belongs in a portfolio of modern options traders, and does it have a place as a diversified asset to hedge against equity risks?
Yeah, it does have a place, actually, Mark. So funny story. So I think those of you who've been listening for a long time know I talked about this a while back. Back when Bitcoin first hit like 20,000, right around there when it was running up, I had like a mine and I was pretty into it, trading it pretty actively every day. And then when that little temporary bubble burst, I was like, I kind of lost interest. And long story short, a friend of mine who's not a trader kind of started trading it. And I was like, oh, okay, hey, I'm going to get back in. So I've been trading it for a while, and it's been really interesting to watch that, like, couple years off, like the makeup of what crypto is kind of changed a lot, and how it's perceived by the public. And so my friend just emailed me or texted me, was it a couple of days ago, and was like, hey, what the heck? We're down like, my account's down like 50%. What should I do? And so I gave her my rationale for why crypto was down. And I said to hold on. It might be a long wait, but to hold on. And so I gave her, and there are 3 reasons. And then I put down my phone, stopped texting her, and I was like, what am I going to do for my daily video? Because I do a daily video for the people who are subscribed, our subscribers. And I just posted on our blog. And so I posted a blog. It's like a short 2.5-minute video that has the 3 reasons of why crypto's down. That one I actually put on our YouTube, our sister website, YouTube channel. It's Traders Exclusive is the YouTube channel. But that was the last video. I just put it out there. I think it was yesterday. So there are 3 things: interest rates, just crypto's now acting more like a risk asset, and and a couple other things. You'll have to go over to our YouTube channel, the Traders Exclusive YouTube channel, and check it out.
Look at you throwing teases out there, Mr. Dan, teasing our audience. Let's go out here. This is another thing we haven't talked about in a little bit, but I was kind of excited when I saw this question come in. This comes from Mackenzie. She wants to know any updates on the Options Book Club. And actually, Mackenzie, yes, there are some updates. And Dan, if you look in the notes, you'll see some photos of what I'm talking about here, Mr. Dan. I remember when we were talking about the Options Book Club, listeners, I mentioned there was a course I took back in my undergrad days that lured me to the dark side of options. And that was the textbook that I first had before I even got to Natenberg and everything else again, before I ever committed and came to Chicago to try out this crazy trading thing. There was a textbook that we had, and I couldn't remember the name of it. I said I was going to go look for it. I did some digging. I finally found it. And it is called, scintillatingly enough, Derivative Securities, listeners. And it is written by Robert Jarrow and Stuart Turnbull. I can see now why I couldn't find this, because I took this at the time I was an undergrad, I said, but I was also a TA, so that allowed me to take some courses in the graduate school if I wanted. So I elected to take this derivatives course. The only place I could find a course on derivatives was in the Cornell Johnson School at the time. So I took it there. And this professor in the Johnson School, Robert Jarrow, wrote this book along with this Stuart Turnbull, who was on the faculty at Queen's University. And actually, I hadn't looked at this book in probably over a decade, if not longer. I was flipping through it last night, and it's interesting the things they had in there. They have all kinds of things. A lot of it about pricing models, which was interesting to me. Like that, they get into binomial trees and all kinds of things that were kind of new at the time, but very interesting. And this book, of course, lured me to the dark side of derivatives. I said, hey, this was shortly after the whole Barings fiasco had happened And I said, people really seem, I was looking for finance. I was doing internships at the time. I think I was only a junior. And I said, everyone seems like they're scared of these derivatives things. Maybe I should learn about them. And that's kind of where the road to the dark side, the path into that cave with Luke and Vader, where that all began for me. Mr. Dan, I'm assuming you're not familiar with the epic tome that is Derivatives Securities by Jarrow and Turnbull, sir?
I am not, actually. I had a book, my book in college was, I think it's just called Options and Futures or something equally as creative. And I forget who wrote the damn thing, but I meant to dig it out after our last conversation. But yeah, I took that class my senior year last semester, and I was just like pretty done with college at that point. And so I was going into the final exam, basically failing the class. And then because I never actually even went to the class. And so like the day before the exam, I like studied it and like got 100% on the test and ended up with a B for the semester or for the quarter. And yeah, that was my story.
That would have been fun if you, who makes your living now educating about options, had failed the options course. That would have been good.
I know. I was this close, man. I was this close.
Missed it by that much. Well, I also mentioned at the time of the book club listeners, I also mentioned there was another book, and I could recall it. I couldn't remember the name. It was a blue book, kind of a trifecta of books I read that kind of got me into this. There was, of course, the derivatives textbook. There was Market Wizards, which is kind of the real main impetus. I read that, and I was like, man, I want to learn more about this stuff. And there was another one I picked up at the time, which I just discovered myself as well, again, buried under boxes upon boxes in our storage. And it's called Bulls, Bears, and Millionaires, War Stories of the Trading Life. And this is by Robert Koppel, Koppel. And it's apparent, this came out, I think, in around 96 or so. Kind of glanced through it again. It's apparent from this, he was trying to go for kind of a bit of a wannabe Market Wizards. He went and profiled a bunch of traders in this one. But this one was all focused on Chicago traders, futures and options traders. And in fact, Robert Koppel himself, not an author I'm that familiar with outside of this book, but he also was a trader on the CME for 15 years, it says. And he's still active. He's still writing books right now. A lot of it seems to be focused these days outside of the derivatives area, but more on psychology. He has books called Investing and the Irrational Mind and a bunch of other things. So as recently as 2011 and 2015, he was still writing books over there on Amazon. So interesting stuff. Mr. Dan, are you familiar with this book or with this author, Robert Koppel?
No, but I'm looking at the back jacket of his picture. He's like going for the Gordon Gekko look.
He does. Guy. It's got the suspenders and the tie. Yeah, he looks like he's straight out of the Wall Street photo. You're right. Definitely.
Oh, that's funny.
So these handful of books were a couple that led me to, I got this when I was still living in New York before I even came here. So I'm not sure where I dug this one up, and I haven't heard much of his book since, but that was one of the ones after Market Wizards and this kind of, I guess you can call it a bit of a wannabe Market Wizards. It's interesting because the rest of his books are more outside of that. They're all about psychology. And clearly the editors probably said to him, hey, maybe you should do something in this style of Market Wizard. So he did. But interesting stuff nonetheless. I remember those of you who had asked too about, is there going to be a book list on the website we can go check out, a reading list? We've been dragging our feet on that, listeners. We'll get on it. We'll post this on the website. We'll have the updates now with these books. I don't believe the Jarrow and Turnbull book, if it is still available, it's got to be in multiple editions now. But if you want that one, it's still probably available on some expensive textbook sites. Maybe I would encourage you to look elsewhere. But intriguing stuff out here. Oh, speaking of I don't know if this counts as intriguing. Our audience, Dan, the live audience, they think they're funny. We have Age here saying Bitcoin is making a move with a bunch of O's according to Live Cattle. So I don't know. Do we allow puns here on this show? That's pretty bad. All right. On the heels of that unfortunate pun, listeners, that music means we're coming to the end of the show. Mr. Dan, before we go, we got so busy at the top of the show talking about sell-offs and vol popping and then reverting out there. We didn't get a chance to find out what the heck you're rating. How's the rating going? And what indeed do you raid in a crazy week like this? Or are you all macro, all vol?
No, this one been doing some rating. today we've got a couple. I've got on BBIG, which I had on when I put that on yesterday or a couple days ago. That one's had a pretty massive move. But
you love B-Big. You're coming back to the B-Big well a couple of times.
I know. But the one that I just put on just before the show, this is a good one. It's NNDM, which is Nano Dimensions. And that sucker, like the market, like you watch how that trades. The January 4th expiration, the implied volatility, the market makers are fucking with it. Like you can pick off the market makers if several people go in and buy a bunch of calls and it drives the stock price up. They're going to try and keep those calls down, and they're going to be so drastically underpriced, because I saw that happen earlier. Like, to me, that's something to watch. Those are some calls to buy. Those NNDM, February 4th expiration. I'm long quite a few of them, to tell you the truth. That's a real nice play.
There you go, listeners. A nice freebie, a bit of a pro tip there from Mr. Dan. And it's always fun to get ones that aren't normally on our radar, Dan. The B-Bigs, the Rockets, all these ones we've kind of seen and done that a lot. But NNDM, I have to admit, that's not been on my radar before, sir. So I will check that one out. Hopefully our listeners will as well. And if our listeners want to learn more, maybe they want to get more rating tips, or maybe they want to just ask you questions about what the hell they should be doing in these insane times, sure. Where should they go? What should they do?
Make your way on over to marketticker.com, 2 T's in a row. And like I've said, at the end of past shows, we've got a lot of free stuff. Check out, if you trade crypto, go to our blog and watch. I'm sorry. Check that out too if you're into crypto. But make your way over to marketticker.com, and glad to help any way I can, answer any questions, let you join for free and check out some of our free classes. Any way that I can help, let me know.
And we kind of lost you there a little bit. What was the crypto thing you mentioned?
Oh, yeah. That's our sister website, YouTube channel, tradersexclusive.com.
There you go, Traders Exclusive. So if you haven't gotten enough Dan here from this show every week, listeners, and even from MTM, you need more in your life, Traders Exclusive is the place to go. And check out some of these rating. It is a good time to be rating out there, listeners. Also a good time to be learning about them, their options. So keep it up. Keep sending in your questions. We know these are crazy times, even for guys like us who've been doing this for a little bit. Seeing a reversal from 4.25% roughly down in the NASDAQ to unch to up. Not a thing you see every day. So, these are interesting times. Once again, 2020 was unprecedented, 2021, and we were hoping for a quiet kickoff to the year for 2022. So far, no insurrection, so we're ahead there, but everything else looking pretty volatile, pretty frothy as we kick off the year. And, of course, later on today, Brian will be coming at you live to tape for OPR. Stay tuned for that on the network. And then back again tomorrow for all the shows I outlined on Friday. And then all the way back to another Education Wednesday next week, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.